Ladies and gentlemen, good day and welcome to IOL Chemicals and Pharmaceuticals Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Prachi Ambre from MUFG Investor Relations team. Thank you, and over to you, ma'am.
Thank you, Saisha. Good afternoon, everyone, and welcome to IOL Chemicals and Pharmaceuticals Limited Q2 and H1 FY26 earnings conference call. Today on the call, we have Mr. Pradeep Kumar Khanna, Chief Financial Officer, Mr. Abhairaj Singh, Senior Vice President and Company Secretary, Mr. Kushal Kumar Rana, Director Works, and Mr. Rakesh Mahajan, Advisor, to provide insights on the company's operational and financial performance. Before we begin the call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements which are completely based upon our beliefs and expectations as of today. The statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Abhay sir for his opening remarks. Over to you, sir. Thank you.
Thank you very much, Prachi, for introduction. Good afternoon, everyone, and welcome to the Q2 and H1 FY26 earnings call of IOL Chemicals and Pharmaceuticals Limited. Thank you very much for joining us today and for your continued trust and support. We truly appreciate your time and your interest in the company. I hope you would have had a chance to go through our financial results and investors' presentation, which are available on stock exchanges and our website. This quarter underscores IOL's resilient execution and strategic progress amid a challenging operating environment marked by cost pressure and supply chain disruption. While the broader industry has faced margin volatility and uneven demand recovery, IOL has demonstrated consistent performance across both segments, driven by a diversified portfolio and expanding traction in non-ibuprofen APIs. Our pharmaceutical segment continues to gain traction, led by good demand for our non-ibuprofen APIs. Our fully automated paracetamol facility is ramping up well, with stable export volumes and increasing traction across regulated markets. As pricing trends improve, this capacity is expected to contribute meaningfully to margin expansion. In the chemical segment, we are seeing a steady volume recovery even as pricing remains subdued. Our focus remains on process discipline, cost optimization, and maintaining a balanced product mix across end-use sectors. As we progress, we remain committed to building a robust, diversified portfolio supported by R&D, innovation, and accelerated regulatory filings across Europe and other regulated markets. With this, I now invite CFO Mr. Pradeep Khanna to share the financial highlights for this quarter and H1.
Thank you, Abhay. Good afternoon, everyone. Quarter 2 of financial year 26 has been another solid quarter for IOL, with consistent financial performance across key metrics. In quarter 2, revenue from operations stood at rupees 567.5 crore, reflecting a 7.9% year-on-year growth, driven by volume recovery and a stable product mix. EBITDA increased 33.3% to 64 crore, with margins expanding by 212 basis points to 11.1%, supported by improved operating leverage and cost efficiency. Profit after tax came in at rupees 30 crore, up by 56.7% year-on-year basis, with PAT margin improving to 5.2% from 3.6%. On sequential basis, there is a slight dip in profitability during the quarter, which is a temporary impact of elevated fuel costs following the Punjab floods, and we expect this effect to normalize in the coming quarters. Post-tax cash profit grew 31.1% year-on-year basis to 51.5 crore, highlighting our focus on free cash flow generation and operational resilience. We continue to deploy strategic capex toward automation, infrastructure upgrades, and scale up of our differentiated API pipeline. Our balance sheet remains strong with minimum leverage and healthy liquidity, giving us the flexibility to pursue growth initiatives without compromising financial stability. With that, we now welcome any questions you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Riya Jain from SGA Finance. Please go ahead.
Hi, thank you for the opportunity. So I had a few questions. The first one was I just wanted to understand how the revenue mix among non-ibuprofen APIs shape up in, say, H1 FY26.
The revenue from the ibuprofen is 62%, and from chemical 41% is. And other API within pharma is 38%.
Got it, sir. And which molecules are currently the top contributors within this basket?
It is ibuprofen.
Got it. And how do you expect this composition to evolve over the next few years?
We expect in the coming years, in pharma, we are supposing to reach 50% ibuprofen and 50% other pharma products.
Got it, got it. And also, how do you see the trajectory of EBITDA and PAT margins evolving over, say, the next 2-3 quarters? Especially considering price pressures in chemicals and, ramp-up costs in pharmaceuticals.
So basically, as we discussed the last quarter as well, our volume growth is being witnessed quarter-on-quarter basis. And this volume growth is mainly coming from the non-ibuprofen portfolios. Because the pricing pressures has been there for last 3-4 quarters, so we cannot very much comment on how these pricing trends is going in the future. But we are optimistic that we will be continuing increasing our volume growth and also maintaining the growth level where we are. So having said all these things, we expect to achieve EBITDA level of something around 13 to 14%, which we discussed in the last quarter as well. So we are keeping that expectations alive for the next or the remaining H2, sorry.
Got it, sir. Got it, sir. And one last question. With the recent EDQM certificate of suitability for pantoprazole sodium process 3, how do you plan to capitalize on this approval?
So there is basically a small change in the process which we have incorporated. That is why we have gone for the amendment in our CEP certificate, and definitely we have the customers where we have already started the approval process, and the plant has the capability to supply the material with this amended process also.
But in addition to this, what Ranaji said, this pantoprazole CP, we are already having this CP. This is the another process which we got it. This is amendment to the existing process.
Yeah.
Got it. And are there specific geographies, volume targets, or commercial strategies in place to scale this molecule in CP compliant markets?
Definitely, Europe will be the target market, and we have the customers there. We have already sent the samples or approval processes going on.
Got it, sir. Thank you so much. That was very helpful. Thank you. All the best.
Thank you.
Thank you very much. The next question is from the line of Dheeraj from RJ Investments. Please go ahead.
Hello. Thanks for the opportunity. So a couple of questions. Firstly, can you walk us through the key drivers behind the 33% of EBITDA growth and the PAT growth this quarter? And specifically, how much of this improvement was volume-led versus margin-led? And what role do you think did cost optimization or product mix play in this? Could you throw some light on that?
The growth in profitability from the year quarter, it is not a single call, but it is a combination of various reasons, both in increase in the quantity also and stable prices also, plus product mix and shifting us some of regulated customers from domestic market to regulated customers also. And as we already discussed in the earlier call, our main focus is now to shift from domestic to regulated market, where the price realization and stable demand is remain consistent. So we are continuously focusing on shifting from domestic to regulated, so that our EBITDA margin, profitability, and other revenues should remain in the growth mode.
Also, capacity utilization of other APIs also increased in this quarter.
Understood, sir. Understood. And on a different note, you have mentioned a sequential decline in profitability due to related fuel costs following the Punjab flood. So could you quantify the impact on the margins and clarify whether this is expected to normalize in third quarter or maybe persist for H2 as well?
Actually, power and fuel costs during the quarter has been increased. It is increased by impact of heavy rains and floods, and amount is affected is 7 to 8 CR during the quarter. Actually, basic raw material rice husk, from which we have generator power and steam. It was not usable fully due to increased moisture due to heavy rains, and we use other costly materials and also got power from electricity board. So it has impacted our power and fuel cost by 7 to 8 CR during the quarter. So in the current quarter, we hope it will decrease and come to the near to normal.
Understood, sir. Understood. That's all from my side. Thank you for answering my questions, and all the best for the future quarters.
Thank you.
Thank you very much. The next question is from the line of Abu Rafi from an individual investor. Please go ahead.
Thank you for the opportunity. So my question is, given that paracetamol has seen a relatively weak demand over the past few quarters, what is the current outlook for paracetamol, and how do you see the coming calendar year in terms of demand and growth?
As regard to, you have rightly said that the demand of paracetamol is not increasing, but as far as IOL is concerned, our demand is increasing to some extent. As earlier, the capacity of paracetamol was 3,600 metric ton, but in March 25, we have started with the enhanced capacity of 11,800, and we are already reached around 55 to 60% capacity utilization. you can say in the first 6 months, we have already crossed last year capacity. We, as a IOL, hope that our product is getting good traction in the market. And although the prices are not up to that mark, but demand is there for IOL product.
Okay. So my next question is, for acetic anhydride and ethyl acetate, the prices have been trending lower from past few quarters. Are we seeing any signs of recovery in pricing, and do we expect to see growth in our volumes in coming months?
So volumes, our ethyl acetate is already running at around 100% or near 100% capacity utilization. So is with the acetic anhydride. So, and the acetic anhydride is also being captively used around 60%. So with the growing productions of the MAC form paracetamol, the captive use of acetic anhydride will also grow internally. So there will be remaining lesser amount for the merchant sale for this product. For the ethyl acetate and these, I think the prices, we consider the remaining half, the prices will remain more or less same.
Okay, thank you, sir. That's it from my side. Thank you.
Thank you very much. The next question is from the line of Maulik from BNK Securities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Sir, a few questions from my end. So we've seen improvement in our EBIT margins for the chemical segment. I heard your commentary regarding cost efficiencies, which has improved it. But can you put a little bit more color on what has driven this improvement in margin?
Actually, regarding EBITDA margin, we expect and declare the target in the previous Concalls about 13 to 14%. But we are not able to achieve the target in the quarter due to unexpected rise in fuel costs due to heavy rains and floods. But if we compare half year 26 with the half year 25, it was an increase from 10.2% to 11.8%. So we hope we will do better in the coming quarters, and EBITDA margin will improve by better efficiencies and good marketing.
Okay. So sorry to interrupt, but I actually wanted to understand regarding the chemicals EBIT margin. So we've seen improvement in that on a year-on-year basis. So what has driven this improvement in chemicals EBIT margin?
It may be like our buying negotiation may be better, or we have some inventory accumulation with the lower prices earlier with us. So in addition to efficiency, there may be some inventory gain also.
Okay. And this inventory at lower cost, so have the overall prices and input prices reduced, or this is a kind of one-off quarter wherein we've seen this improvement in the chemical EBIT margins?
Yeah, we are continuously negotiating or seeing any opportunity for best prices or other negotiation are going with directly with the manufacturer in China. So we hope it will be better opportunity to us and remain positive for the IOL.
Okay, sir. And also on an overall basis, we've seen that our volumes have picked up in this quarter, and that has driven the growth. For, I think, chemicals, the growth is flattish because the pricing was under pressure, but the volumes were able to offset that decline. And for the pharma piece, I think the non-ibuprofen portfolio drove that growth. So which all products, drove this volume growth? Was it only paracetamol because of the new capacity which drove this volume growth, or were there any other products also which contributed to it?
Maulikji, rightly you said the paracetamol is the one product, and apart from the paracetamol, clopidogrel is also the good products of our portfolio into the non-API. That also did well for this quarter. Coupled with the pantoprazole and few other non-API products. So put together all these bring the growth within the non-ibuprofen portfolio.
Okay. And sir, can you just tell us on the pricing about how the prices are for paracetamol and ibu as of now?
The same as these were the last quarter, so more or less same.
Okay.
However, little bit dip in the paracetamol prices, but more or less same.
Okay. And just one clarification, I kind of wasn't able to hear it earlier. You had mentioned some 62% versus 38% ratio. I think that was a revenue split between ibu and non-ibu.
No. Actually, the 62% is our ratio of ibuprofen within pharma, and total pharma ratio is 59%, and chemical is 41%.
Yes.
59 and 41%.
Okay, sir. Sure. Thank you, sir. If I have questions, I'll jump back at you. Thank you.
Thank you very much. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello. Am I audible, sir?
Yes, you are,
Yes,
sir.
please.
Thank you, sir. Thank you for the opportunity. Firstly, so my first question is, wanted to understand in this quarter, what percentage of our margins got impacted due to higher cost of fuel? Wanted to understand if that hadn't happened, would we have done better margins than what we did in quarter one?
So actually, due to power and fuel cost, the margin is affected by around 1%.
Okay. And we can see normalcy coming in this quarter? Sorry?
Sorry?
I couldn't get you, sir. Sorry. Hello?
No, it was amounting 1%, amounting to around 7 to 8 CR.
Okay, 7 to 8 CR. Got it. So can you expect normalcy kicking in quarter 3 and quarter 4 in terms of that?
So we hope in this current quarter, we will achieve power costs near to normal, and it will be reduced by 5 to 6 CR.
Okay, got it. So my second question is, what was the utilization of our new paracetamol facility in quarter 2, and how do we see this number by end of this year?
So this quarter we reached to 55% capacity utilization for the paracetamol from the new plant, which was start or commenced in March this year. And by the end of this year, means by the March end, we think we are expected to reach about 65% capacity utilization.
Got it, sir. So that's all from my side. Thank you.
Thank you very much. The next question is from the line of Jainam Ghelani from Swan Investments. Please go ahead.
Hi, sir. Thank you for this opportunity. So what is our capex guidance for FY26 and FY27, and where do we wish to expand?
The capex plan for the current year is 150 to 200 CR, and we are doing capex from 150 to 200 CR approximately every year, and it includes growth capex, infra, land, new software, automation, and for the next year also we plan 150 to 200 CR. So current year we have already use 60 CR approximately in the first half year, and for the other next half year, it will be near about 200 CR.
So, sir, how much out of this 150 to 200 crores is maintenance capex and what is growth capex?
Maintenance and infra capex is generally 40% and growth capex is 60%.
Okay. And so, would it be possible with the current pricing of ibuprofen, metformin, and paracetamol?
The prices of ibu and paracetamol remains the same as the last quarter, and slightly dip in the metformin prices due to decrease in the Ramdeal prices also.
Okay, so that's it from my side. Thank you.
Thank you very much. The next question is from the line of Richa Shah from SRP Associates. Please go ahead.
Hello, sir. So my question is, could you provide an update on the regulatory progress of fenofibrate and levetiracetam, particularly considering the recent DMF observations from the US FDA? Also, what is the status of our upcoming EU GMP audit schedule for November?
So, first, your question was with respect to levetiracetam and fenofibrate DMF. So already we got some observations from FDA and the queries are responded well in time. So we are waiting for the next step. I think it should be clear because as of now there is no communication from the authority. And your second question was with respect to EU GMP inspection. So our EU GMP inspection concluded last Saturday. It was for 6 days and we don't have any major observation, only recommendations were there.
Okay, got it. Also, with the EDQM approval for setagliptin phosphate monohydrate, a high volume antibiotic API, how are you positioning this molecule within your broader commercial strategy?
As of now, we are not doing this because of the price war in the market, because whatever the price is there in the market, that is not even the cost of production. So right now, we are not pushing that molecule very fast.
Okay. So, are there any specific, what I can say, also could you share some, which therapeutic areas are you currently in strategic focus for IOL's API pipeline, and beyond the pain management and antibiotic, are you actively pursuing opportunities in CNS or other chronic segments where regulatory tractions and export potentials are strong?
No, as of now, probably we don't have any specific segments to target. Only like the molecules which we have already selected in our R&D, they are basis on the demand and supply gap within the market. So on the basis of that, we are taking up the molecules.
Okay, sir. Got it. Thank you.
Thank you very much. The next question is from the line of Maulik from B&K Securities. Please go ahead.
So thank you once again for the opportunity. So just wanted to understand, sir, how would be our 2H be like, because we've grown around 9% in 1H and our expectation was to grow around 10 to 12% revenue for FY26. So will we be able to achieve that in 2H?
You are right, Mr. Maulik. We were having the overall guidance for around 10 to 12%. I think a little bit we could not reach to that level within this H1. But the H2, we are hopeful that we will be achieving 10-12% from now, but maybe a little bit short as compared to the whole year. But we will be reaching very close to that.
Okay, sir. And one more understanding is, I think in H1 our domestic contribution has been 76%, and for first quarter it was around 74%. So I guess the domestic contribution has increased. So what are we strategizing to improve our export contribution, which was, I think, mentioned in our earlier commentary, that will help us in better pricing?
So you are right. Because of the domestic supply from IOL has been increased during this quarter, and that is also because of the increased capacity utilizations and also the increased capacity utilizations of the paracetamol. Whereas in terms of the value, if you talk about, our export was more or less same, and a lot of developments are going in. So we are very hopeful and optimistic that for non-ibuprofen export sale will be definitely increasing this quarter and the next quarter.
Okay. Thank you, sir. Thank you.
Thank you very much. The next question is from the line of Ritik Shah from Capital Alpha. Please go ahead.
Hello. Am I audible, sir?
Yes, sir, you're audible. Please go ahead.
Yes. Thank you for the opportunity. So my first question is regarding, could you provide an update on the land parcel acquired near the Chandigarh, but it's on India Highway?
Yeah. The land is already in the process of regulatory approvals, and some of the approvals are already got, but 2-3 approvals are still in the process. So we expect within 2 quarters we will able to get all the regulatory approvals.
So Ritik, when we announced about the acquisition of this land, we were assuming that it will take around 8 quarters. So I think we are as per that schedule.
Okay. And my other question is, what was the strategic rationale behind the incorporating IOL Pharmaceuticals UK Limited, and how is this subsidiary expected to contribute to expanding our global reach, particularly in terms of regulatory engagement, customer proximity, and strengthening our presence in key international markets?
So the idea of incorporating a wholly owned subsidiary in the UK is one of the important aspect is to remain near to the customers and understand the customer's requirement and meeting their requirement earliest possible manner. So this was the basic idea, and this request also comes from our various customers into the Europe zone. So that was the main idea, and apart from that, we will be looking for having the other business proposals and the business opportunities while we will be working on these things. So we will keep you updated as the plan gets developed.
Okay. So that's it from my side. Thank you.
Thank you very much. The next question is from the line of Sheikh Mohammed, an individual investor. Please go ahead.
Thank you for the opportunity and congratulations for the good year-on-year result. My question is, few questions are there. Regarding the patents we have received patent for the sitagliptin and sartan drugs. So how is the progress going on with those patents of sitagliptin and sartan drugs?
Sir, actually, if you see the sitagliptin progress as of now in the market, we have the product developed, we have the patent for that, and even we have got CEP for that also. But probably the market competitiveness in the sitagliptin is very high. Even that is why right now we are not doing that product in commercial production also, because whatever customers are asking for, that is a very competitive price.
Okay. And about sartan drugs? Tell me sartan and sartan.
Yes, sartan we are working and we have the plant and we are going ahead with those products, but we are in multi-product facility. As and when we are getting some orders, we are having the plans to do those products.
Okay. Sir, any impact of US tariff? Because last quarter we have discussed that We will see when it will get, you will still apply pharma tariff. So is there any impact on us?
So I think situation is same for the IOL regarding the US tariff situation as it was the last quarter. We are not impacted as of now because whatever the tariff has been there and that is on the branded and other products, it is not on the generic products.
Okay, got
And
it.
IOL products are all generic products.
Yeah, right. Sir, apart from other expenses, employees' benefit expenses have also increased. If you see, the cost of expenses of employees has been improved by, excess by 5 crores, and other expenses also increased by 10 crores. If we just remove those costs and consider as the same, we could have achieved more after profit after tax, right? So, okay, you have explained regarding other expenses, but about the employees, do we have hire more employees than previous quarters?
No, employees are not more, it's the same, but because of some year-end variable payments, incentives related payments that comes upfront and bluntly in the one quarter, that was the reason you seen it into the financials. It's about 6 CR impact therein. That will not be in the Q3 and the Q4.
Okay, Q3 and Q4, those expenses won't be there. Okay. Next question is, sir, previously I have asked you about the base quarter and bad quarter for the company, and management just told that Q2 is bad and Q4 is the best. So can we see more profitable upcoming quarters?
Yeah, we are also expecting the same. We think so.
Okay. And which are the 9 more drugs in the pipeline? I just want to know about those.
Pipeline drugs. We are actually working on various drugs into the pipeline.
Bulsartan is there, Bulsartan Security is there. So they are all those products, they are there in the R&D scale as of now.
Okay. Sir, last conference call we have discussed about 3 patents, right? One is Apixaban. I have go through the LinkedIn profile of IOL Chemicals. There is a mention that we have filed for patent of Apixaban. So I have go through that. Don't know. Last quarter also I have asked regarding that we have filed for Apixaban. So it is there or just it's a mistake?
No, it is there. So probably that is again a product which we have done till pilot scale only, and we don't have any as of now commercial production for that product.
Okay. Last question. Sir, if we, for example, if we receive US FDA approval, so how is the impact of that approval in our company? More significant or much or very less?
So it will depend how approval from FDA is one part. The impact will be there as and when we will be supplying our commercial quantities to the customers in US regularly. So that will probably come with a passage of time, not instantly.
Okay. And in presentation, I see that metformin and phenylfibrate already got the US FDA approval.
Yeah.
Yes.
Okay. So after the inspection, there will be a opening of passage to export those products, metformin, phenylfibrate, or you can do it now.
For export, metformin we are already, and other products we are already exporting to the Europe and other. But this US FDA approval help us to export into the US as well. So we are already exporting it in the Europe and other countries.
Both metformin, phenylfibrate, and ibuprofen, all 3.
Yeah, all 3. In fact, all products of the IOL have CP approval. That means we are allowed to export in the Europe. We have the Brazilian approval, we have the Korean approval, we have the Russian approval, we have many other approvals also.
Okay. No. I know that those approvals are, but for US, we require US FDA, right? So my question is, metformin, fenofibrate, and ibuprofen, all three we are currently exporting to US or only ibuprofen? Because metformin and fenofibrate inspection has not been done.
No, Mr. Seth, we have the approval to export. That means we are allowed, we can sell it. But the question is whether we are exporting it right now or not. This is another question. So, IBU we are exporting, but very less amount to the US.
Okay, thank you. All the best. Thank you.
Thank you.
Thank you very much. The next question is from the line of Aisha Mandhane from Samsich Investment. Please go ahead.
Hello. Thank you for the opportunity, sir. I actually wanted to ask what revenue we are targeting in coming 2 to 3 years. I just want to understand, given the current demand and pricing trends in the market, how is IOL expecting the revenue contribution to be from both of our segments? Also, how will our EBITDA margin improve going forward? Will it cross 15%? Is there a possibility as we scale our exports?
Actually, in regard to the revenue, we're expecting 10 to 15% growth in every year, and hopefully we will achieve this in the current year also. And regarding the next question is regarding EBITDA margin. We hoping EBITDA margin 13 to 14%, and it will definitely 1 to 2% increase every year we are expecting. And regarding demand, the demand of our products is stable and growing. And in regard to the paracetamol, our capacity enhancement, we are expecting capacity enhancement in the next year to 65% from the current 55-56%. So the revenue we will targeting 10 to 50% increase in every year.
Okay, sir. Got it. Also, sir, is there any important highlight if you want us, the investors, to know that there was in this quarter? Any update if you want to provide from your end? Like, how should we see IOL in coming few years?
I already, there is no particular news as of now, but we are hopefully targeting 10 to 15% increase. I already stated that we are hopefully in the next current year for the 27, we are targeting 2600 to 2700 revenue, and EBITDA margin is 13 to 15%.
Okay, sir. Got it. Thank you. All the best.
Thank you very much. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Yeah. Thank you once again for joining us. The performance of the company reflects steady progress along with our strategic roadmap. We continue to move toward a more diversified and export-driven portfolio, supported by investments in differentiated APIs, expanded manufacturing capacities, and strong regulatory engagement across key markets. With a healthy product pipeline, good cash flow, and disciplined execution, we remain well positioned to deliver sustainable growth and long-term value for all stakeholders. Our focus continues to be on driving scale, improving margins through scaling, automation, and backward integration, further strengthening our presence in the regulated geographies. For any further queries, please feel free to contact our IR team. We appreciate your continued trust and support, and we look forward to engage with you in the quarters ahead. Thank you and have a good day.
On behalf of IOL Chemicals and Pharmaceuticals, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.